Hey guys, thanks a lot for tuning in. Hxro Labs episode, I think we're on 28 now. Today we're going to be jumping straight into it. FOMC just came off. It is holding interest rates at 0%. Outlook probably unchanged until 2023 at this point. What's that going to mean for Bitcoin? Well, low rates are good for Bitcoin because odds are the QE is going to keep coming. And it's going to have to keep coming because wage growth is pretty much stagnant right now. People are spending all their income to pay down debts, bills that have been piling up for the past 3 months. So it's very unlike 28, where we had rampant consumer spending on second houses, third cars, things of that nature. So a completely different scenario. Fed holding rates. Let's see how the S&P and the US dollar are responding to this. This is where we'll start off our stream today, just on the macro stuff. We've been watching this USD chart for quite a while now, and what we are seeing now is kind of almost an inverted head and shoulders forming. So something like this that we were watching, like this here. So this could even get down, another 0.5% or something, and still be in bullish territory. You got your bullish throwback right off this level here. So, oh yeah. Guess you guys can't see what I'm showing. Okay, there we go. Okay, so one more time. As we can see, US dollar grinding out these lows right now. We're going to see how this market responds once Powell actually comes out, starts making comments and stuff. But what are we looking for here? Well, similar to a head and shoulders, we see an inverted head and shoulders here. So again, the market can come down, all the way down here, form a base off this level here, down there at 11.9225, and still be relatively bullish. Where would we be looking for conclusion of this pattern for? Well, right up here at the range highs, 1080. This is one of the key levels that we need to break. We zoom out here. This, we've been in this range for about 2 months now. If we come out of here, I think we'll see a pretty aggressive move up to that 12.2. That'll put the downwards pressure on crypto that we've been talking about. And speaking of crypto, let's take a quick look at Bitcoin to see how it's responding to the interest rate announcements. Really not a lot of action here compared to what we saw on their last comments last month. Again, this is something, there's nothing new coming out from the Fed right now, so it's kind of a mute response across the markets. So with that in the bag, let's take a quick look now at the market structure of Bitcoin. Actually, we'll start on Ethereum today here. So we're constantly talking about throwbacks, support and resistance flips, and it's all based off Wyckoff theory, right? Why are we not bullish yet on Ethereum? Because it has yet to break this 395, 396 level, right? We can see we came back down here. We did find a little bit support off this level, so I am being a little unfair to the bulls. Yes, there's indeed a small intraday level there at 300, 320. So you can see right now we're just stuck in this range. And yes, it's a tradable range for scalpers and stuff, but swing traders need to take a step back and wait for the expansion of this range. So what do we have here? It's 20% range, so there's money to be made. But until we move above this 391, there's just no reason to be bullish right now, unless you're already long down from the throwback area, right? But this is where if you're trading the ranges and the throwbacks that we teach, this is where you should be looking to take some profit off the table. You don't want to be getting long rate here. Probability says that this gets rejected. When it does close above this 390, 395 level, that's when you're going to want to be re-entering. So like taking risk off here, for if you've been long down here, it's the move. Why? Because now you're removing the risk of this headed back down there to the 280, 290 level, which is a untested support and resistance flip level that we have been watching for a while. Didn't quite make it down there on that first stab, but pretty confident that if we don't close above here this week, that we will be taking a stab back down there. Quickly checking back on the USD to see the reaction. Last week's FOMC, we saw pretty significant rally following Powell's comments. Seeing a similar camera structure here, nice bullish inverted hammer there. So keeping a close eye on there, you would expect that equities were pulling back a little. They are not. Are we going to see a divergence between the markets? I doubt. It could just be a lagging indicator. We'll just have to see how the Fed comments continue to go. Why are we starting with the macro here? Well, the markets have been so correlated to legacy, as we said before, with institutionalization in the space accelerating. The market participants who are actually moving the large liquidity are the same guys who are trading in the legacy space. They have the same risk profiles, the same strategies, right? So what we need here for the bulls is to hold this former all-time high level right there at 3370, 3371. If the resistance now that we need to close above, basically right up here. And again, we don't have a lot of price history to go off of here. This was the expansion, a high momentum expansion move into new highs. So all we can take here, we got about 4 candles wicking into this zone. So the resistance to break now, it's around 3,500. Seeing some news in the comments. Background music feels more dominating. All right, good to go there. Thank you. So no real response just yet from the S&P. The US dollar starting to move up. If we do see, exactly, this is what I'm talking about, guys. The inverse correlation between the US dollar and Bitcoin has it's very prominent right now. And obviously, today we've been rallying in here, but look at this trash. Like, are we bullish midterm? No, we're not. Look, we're clearly rallying into the bearish throwback level. It's 11.3, 11.4 level. It's pivotal. This is the level that bulls need to actually break for this market to turn bullish again, and we'll actually see some continuation. But what's happening right now? What's the play that we like to see? Price comes back in, comes back. This is the most bullish play I could see. Confirming that bottom, and then it would have the momentum to finally take off here and see continuation, probably 12.5, 13.1, which was the former weekly and monthly levels. But where's this going to go if the bearish thesis plays out, right? And again, this is a macro play. This type of information should be influencing how you manage your whole portfolio. If the market is about to drop 10, 30%, why not just get out of those assets and buy it cheaper, especially since I assume a lot of people are leveraged into alt positions, which are essentially leveraged longs on Bitcoin and Ethereum. Ethereum a little bit more so, right? So if we see that drop coming over the next quarter, and you have exposure both through the base asset, Ethereum or Bitcoin, as well as those Uniswap pairs, which historically are much more volatile, especially when we have violent downswings, you're not going to have any dry powder to buy the dip, right? We're still macro bull on this stuff. We're only sitting at less than a $15 billion market cap in DeFi. The addressable market's over 22 trillion. So quickly back to here, what are we going to be looking for from the bearish case? Well, a sharp rejection from this level. We could get bounced back up, failure. This bounce here, wherever this stalled out, would be your entry if you're not already risking a short in this range here. So again, if you're not taking the risk here, and it's a pretty sharp invalidation point, like anything I'd say over 11.6, 11.7, and you could cut this. So that that's less than a 4% risk. That's like a 6-to-1 RR off that. So yeah, if we fail here, looking for resistance to come in again at 10.56 level, just off these highs, right? Like a lot of the time these carry over. So we'd be looking for failure around those levels, 10.5, 10.57. And then we'd be expecting these lows to get swept here and probably come back into that 9.6, 9.2 level before we got the true bounce. I would say this is the candle that really kicked off things right here. So this is why we've been looking at this level so tightly, right? Like we broke basically right here. We broke the range. We got the high momentum candle. If there's going to be demand, it's going to be at these levels. So keeping a close eye on that 92, 9600, and I believe that's also the key level on the CME. I'll pull it up now. But that would also fill the 9,200 to 9,600 gap that we've been eyeing for the past few weeks. Quickly looking at Bitcoin dominance, because it's painting a very similar, there's so many ways for Bitcoin dominance to continue falling here. It's our thesis that Bitcoin dominance will continue to fall just because we're seeing some other large networks such as Solana, Polkadot, Ethereum, Cosmos. There's so much value being created on those networks right now. There's not as much value being created, it doesn't really have a second layer to it right now, right? Like Lightning Network still in development, Root stock smart contracts. Who knows when those will become a thing, right? If the future's interoperability, there's less incentives for developers to build directly on top of Bitcoin when they can use another chain that can handle a much higher throughput rate for transactions. Just use Bitcoin will most likely just remain as a settlement layer, in my opinion. So again, key resistance here, bearish throwback. Where is this going to go if we get rejected? Well, probably back down to these levels, right? So let's check on the drop. That's a pretty significant drop in dominance, almost 10%. What's that going to mean in the market? Well, it's going to be alt season. And I don't think alts are gone just yet. Let's take a quick look here at the total market cap. This is my key metric that I use to decide, again, help me coordinate my portfolio moves, not just how I'm trading. I'm looking for this HODL zone to hold to give me confidence that even holding my Uniswap pairs or longer term investments is still the right move to be making, right? If we're above this weekly resistance around that 420 billion mark, we're in bubble land. I call it bubble land just because we see there's so much upside here. There's so much gap and so much air that we would probably slice through this very quickly, and we'd probably be seeing 20-30% days across the majority of the alts. And that's probably my biggest focus right now, is definitely on the altcoin side, just because the upside is much greater than Bitcoin's. Is Bitcoin realistically going to 10x from here over the next few months? Probably not. But a lot of these alts where their market caps are sub 10, 5 million, the probability is much higher there. So that's what we're keeping an eye on here. If we do lose this HODL zone, 280 billion, I'm already kind of pretty heavily into Tether and stuff right now, but I'd probably move even more so into stable coins. And that's the great thing, guys, is that, compare crypto to now compared to where we were a few years ago even, it's much more easier to get in and out of USD through stable coins and things like that. So it's not we don't necessarily see that same liquidity cycle of where people have to sell alts for Bitcoin, and then they're using Bitcoin as the quote unquote stable asset, less volatile, to keep their money actually in this ecosystem. That narrative's gone, or you shouldn't be paying attention to it, because there's so many cross pairs with USDT, USDC now at this point, right? People don't need that bridge of having to go into Bitcoin and then into a stable coin. A lot of the time they can just either buy the altcoin directly, or they can sell the altcoin directly to USD or USDT. The money remains in the ecosystem, but it's cheaper as well. You don't have 2 transaction fees that you have to go through. But that was a big driver of Bitcoin market cycles beforehand. When alts were unwinding, you could bet that Bitcoin was going to skyrocket, right? It's not necessarily the same anymore when you have all these different onboarding routes. And I guess that kind of quickly want to dip into this big news that came out this morning. Kraken has been issued basically a national chartered bank within the US. There's not going to be any international angle to this just yet. So just US customers. But this is great. This essentially, for the longest time, especially early on, crypto had the same thing with the medical marijuana industry. There's so many of these gray areas in crypto. It kept banks, even today to some degree, keeps banks from supplying financial services, even simple ones such as just a bank account with crypto companies, right? So that created a market demand. It was a vacuum. So you saw people like Signature Bank. They created a Signet platform that allowed for institutional settlement. Who else was there? Signet. There's a couple other ones. Point is that they were banks specifically designed and catered for cryptocurrency. Now, the biggest news to come out over the past few months, in my opinion, has been that US national chartered banks can be custodians for cryptocurrency. That's going to be the big moment where we're going to be seeing a lot more retail inflow as well as more sophisticated investors. But the point is that it removes barriers to entry. Imagine logging into your JP Morgan or Citi account or wherever you're banking in the US with the major banks, and you have access to move funds directly from your traditional portfolio or your checking account, savings account, directly into crypto assets. And the big thing around why this is important is because those banks are going to offer insurance on those holdings, right? So a lot of exchanges, they don't offer that. I think one of the only exchanges that does is Bitstamp, up to like 250K or something. So this is huge news. This is what I'm saying. Like, the macro perspective and direction on crypto is extremely bullish. There's just so many moving parts with so many legacy institutions that integrations can take a while, but they're happening. And that's the main thing here. The regulations have cleared the way for this. And I think it's only a matter of time until we see an ETF product, potentially as early as next year. It'll just, again, make it easier for people to board into this space. This is, again, just a quick view again of Bitcoin here. You can see approaching major resistance. If it breaks this, you may as well just set an alarm. That's all you have to do. You don't need to be following in at resistance. If we see this triggered, okay, you need to look at it because momentum is clearly shifted back into the bulls, coming off this bullish throwback level that got retested, so far turned support. If it breaks this, we're going to have huge continuation, probably back up to these levels would be my guess. Untested, there's a lot of thin air here. Look at the volume profile. Like, this thing could really, it will fly if it breaks that level, right? So wait for the expansion trade, guys. Like, there's no reason why are you caring about 2% at this point? The trade is gone, so just wait for the expansion, and this is what you want. 16-17% spot move on Bitcoin. Odds are Ethereum would give you even more upside target. Oh, this is a fucking god awful chart. But the point is that the volatility on volatility on Ethereum is much greater than Bitcoin. So we'd be looking for an overshoot all the way up to that 550 range. Yeah, somewhere up to here. So 515 up to 550. That would be the overshoot target. So if I see Bitcoin over 11.4, I'm probably going to be wanting to get long on Ethereum more so than Bitcoin, just because we know Ethereum tends to move much more violently, and similar other mid caps and stuff like that. Okay, what do we got? Anybody have any chart requests? Just drop them in the box. We will get to them later on in the show. But now we would like to take a quick look. I'm a huge fan of these PERP products that FTX put out, essentially indexes. I know the weightings are a little bit skewed right now. And the reason why that is because if we take a quick look here at the analytics, the liquidity pools on Uniswap absolutely shit the bed over these past few days. We peaked at 2 billion, dropped by upwards of 75%. And that's a mixture of the fear and panic that we saw in Ethereum, people just pulling out. I know there was a couple smart contracts that also had some blow ups, but the big reason that I see is that there's so many more competitors now. You got Uniswap, you got Uniswap, you got FTX with their Serum project. The point is that there's so many more decentralized exchanges out there that are actually catching traction right now, right? So that's why we're seeing this drop off in liquidity just on Uniswap. Do I think all of these exchanges are going to be around in, say, a year? Probably not. There's a lot of interim solutions for transaction batching, like with Falcon Swap. There's a whole bunch of other swap products that are launching, but Uniswap has the larger network effect around them. It has the first mover advantage. It has the brand awareness, right? That's the advantage of being first. So I know they just raised, I think, around like 10, 15 million bucks. So they're going to be rolling out a whole bunch of new features that are going to encapsulate what all your other competitors are doing. So it's going to be really interesting to see if these other competitors can maintain their market share once Uniswap kind of just comes back in there and takes everything that these other competitors have developed and then just rolls that into their platform. And that's it's a blessing and a curse of crypto, of how fast things get iterated, right? 1 second your idea might be valid, worth $1 billion, and then suddenly you got 60 competitors, much more well capitalized, larger teams. So competition is fierce. Protect those ideas. Don't put them out there until you have an MVP. Otherwise, you're going to get stolen from. So moving over, quick look here at some of the other hot coins. MTA, PERP. I know a lot of people have been following this one. They wanted a lot of TA requests on this. And it's a great chart to be looking at right now because it perfectly exemplifies our Wyckoff entries and exit strategy. Anytime you have a major support level like this is the history of the market. It only goes back till July. This is a 4-hour chart. But anytime you have a major support like this get dumped through, retested, you can expect a very high momentum, high velocity move off of that. And sure enough, that's exactly what we've had. Once this daily range broke, look at the downside. 38% in a matter, what was that, 24, 36 hours or something? Where's the bottom? I don't know. This is in price discovery right now to the downside. I think just from where would I want to be getting long? Well, we've come back up to this first former support level, and so far rejected. So what I'm looking for and what I suggest to people is waiting until you see that confirmation of bullish structure and momentum return into the market. You don't need to be trying to catch all these knives, especially when there's so much overhead uncertainty with the majors literally at resistance right now, right? So what's the best way? If you're bullish on MTA midterm, long term, how do you enter into this market? Well, you can't get long on anything down here, in my opinion. What I'd want to see is a return back up to the support level and a little tap like that, confirming that this is indeed turning back to support, right? That's going to give me confirmation that the bulls are back, the bears have had their chance, they've given up, they've lost, and now we're about to see some higher highs. So you can either take the long off this first retest, the first retap, or after this first momentum breakout, or you can wait for the retap back down to the support level. And if you saw support form there again, this would be a high probability entry on the long side that you could probably hold for a while. First target obviously back at this $5 level, this little consolidation block, huge volume profile there. You've already seen this level act as a catalyst several times. So again, it would be the exact same thought here. Coming up there, probably going to turn into resistance the first time, and then it could just squiggle its way up, right? So that's something what we'd be looking for a bull, and it would also create that nice U shape. And why I like seeing that U shape versus, say, a V is because a lot of the time the V's come back down to retest things, right? I like seeing this longer consolidation U bottom because generally these form over a longer period of time, so the reaccumulation periods are longer, so it has a stronger base, and usually the momentum breakouts from those are much higher. So we got, looking in the chat here, got a request for Cream. We did put out a tweet on this one the other day. I know Cream, this is Cream Financial. They're trying to roll out a whole bunch of assets. They want to build like a whole ecosystem. Absolutely savage. What a savage chart. They call this the Eiffel Tower, right? I know a lot of people were trying to buy this SR flip up here. It didn't work out. We had these daily support levels marked. It overshot a little bit. And that's the problem with TA on some of these smaller charts with less data, is that you can only work with what you got. You don't have a lot of confirmation of how strong a certain level is, right? You can only go on, like we only had three taps in 3 days. So it's not a lot to go off of, but this would be the real daily support that I'd be interested in buying, especially if I think that the majors are also going to see some more downside. And this is some pretty high volume selling here, right? So it's such an early stage in the project. Can you pull the contracts? The transactions on the network are just trying to give an idea of, is this actually being used or not? Or if it's not, well, then there's just going to have continued downside sell pressure, right? So that's my thoughts on this one. I can't really advise an entry right here, right now. doesn't look amazing. Like, yeah, it's getting close to that daily support down there at 57, $60. I'd probably be interested for a bounce down there, or if it could get back up to reclaim this level here, right? This is going to be a key resistance, right here, 140 to 150. If price can manage to get back above this, I'd say it's bullish again. So until then, I wouldn't want to be having any exposure here. So quick recap, either this thing comes back down to retest its daily range around 57, $55. I'd be interested for a long there, or waiting for the momentum to signal that the bulls are back in charge above that 160 mark. Otherwise, I wouldn't touch this thing with a 10-foot pole. Doesn't look great right at the moment. RUNE. Okay, this is a common request one. Let's see, I don't have a chart up for that just yet, so let's pull one up. I'll just use the PERP product. Oh wow. Okay. So this is an ugly one. You know, it's come back down to a key level here. Let's zoom this out to the daily. Again, when you're doing TA, guys, start on the high time frames. Don't start the low time frames and make your way up. Your biases are going to be completely screwed. So what we're doing here, again, not a lot of chart history, about a month and a half, but it's pretty clear what needs to happen here. So quickly grab this last level. And there you have it. So price is broken down. It's bearish. This is similar. Doesn't this look similar? Looks very similar to ETH, doesn't it? How it's come back into that bearish throwback level and gotten rejected, made a new low, and came very close to retesting this daily block. I would expect to find, you know, pretty significant support in this daily block. This was actually the origin point of this entire move. So a lot of time, you know, price, even if it is going to nuke to new lows, you're going to see a bounce at the origin of the springs. So what am I talking about when I say origin of the spring? Well, let's take a quick look specifically right here, right? This is the candle that actually broke this consolidation. You know, you had about a week-long consolidation. This is the candle that broke it, the consolidation block, which sent it on this run. So that's what I'm talking about when I say, oh, this origin of a spring. This is where the demand is going to be, in this block here, right? So what's going to happen? Price is likely going to come back down and then shoot back up. Whether it's bearish or bullish, it's not yet confirmed here. This is just, a lot of the time you're going to have resting orders at these prices. And that's, you know, that's why price, you know, stops at a certain level. There's just so much liquidity at resting at those levels. So it just has a, you know, tendency to bounce off that. The next piece of confirmation you're looking for is that, are there new buyers stepping in to follow that initial bounce, right? And that's why you get those bearish throwbacks in the first place. It's just a reactionary, price is just reacting to the liquidity block. What does it actually need to do to confirm that this is indeed a bottom? It needs to retake the bearish throwback levels that it's painting here, right? So I would need to see price come off from those lows, back over 60 cents, and then I'd be confident we were going to go back to a little trend. You know, bounce like here, and then bounce right back up to here. So, you know, great trades to be had there. I think it's like 30% or something. But again, the point here, there's no need to rush in. You know, this is why I'm saying don't rush in to get long on Bitcoin and Ethereum right now. It's at these exact same levels with this exact same market structure. This plays out time and time again. YFI, another governance token. Okay, let's see what it looks like. Keep them coming, guys. I love doing analysis on these, getting some two-way conversation with you. I know these are the hottest coins out there right now, and we're going to get into some more of the gem finding stuff here in about 5 minutes before turning it back to the community stuff to finish things off at the end of the hour. Again, there's same thing here, right? This is the origin of the move. I was very surprised that it got picked up right where it did. I thought it would dip down a little bit more. So, you know, it's made higher highs. This was off the Coinbase listing. We caught that pretty well. So where does this thing need to hold? Well, right here. So what are we going to, if this thing is bullish right now, and the stoke doesn't look amazing, kind of a bearish div there on the divergence here. This is VZO, another momentum indicator, right? So, higher highs on less momentum, generally not great. Those do tend to get faded down. Sure enough, it's almost down almost 50%. What are we going to be looking for at this point? If this is indeed bullish, a nice price reaction at the 28,000 mark. If we see support here, well, from a Wyckoff point of view, that's going to signal to me that we are going to at least bounce back to that 36,000. So kind of this block right here, right? You can see a little bit more pronounced if I draw it out like so. Oops. Right here. So this is the resistance level that's going to need to break in order to signal to us, the traders, the speculators, the liquidity, that this is indeed ready to keep running higher. So if it does indeed fail here, well, this is going to confirm a top for me, high time frame, bearish divergence on momentum, breaking potential support resistant flips. That's good enough signal that I would be pretty confident we were headed down here. So again, 28,000 mark, pretty key support level to hold here on the daily. Let's see how it goes. Those are my thoughts on that. What else do we got here? BNB thoughts. Okay, we got some of the shit. We got some good ones here. So quickly, I just wanted to go over this daily DeFi perp. Same thing, right? We're stuck, and this is a lot of markets. This is basically all the majors right now. Even the total market cap chart. Look, they all look exactly the same. We're all stuck between the support and major resistance level, right? We're waiting for that next expansionary trade. What do we need to see right here for the DeFi run to continue to bubble to new highs? We need to see DeFi back above this level right here, basically 30,000. Go ahead on your charts, set those alerts. If you hear them go off, it's time for the next DeFi bubble. In the meantime, this daily support level down here at 20,000 must hold. So, same thing here. Go ahead, set an alerts. And this is why I love TradingView so much, is because I can just look at a chart, map my levels, set my alerts, and move on. These aren't charts that you need to be checking every single day, unless you're trading it on FTX, right? But these things tend to move a little bit slower, less volatile than the underlying assets that actually make up the index. So again, quick, same thing here at Uniswap. Well, how can I be bullish when we're below every single resistance level, making lower highs and lower lows? Like, this is the final range right here, right? Zoop, zoop. And this is going to impact things like Cream, like Ethverse, Falcon Swap, YFFII, like all these tokens that are on Uniswap. This is the chart you need to be watching. Should you be in Uniswap pairs below this resistance or getting long? I wouldn't be, unless I was trying to catch, a knife back down here at like 20,000. But again, that's 20% down. This is pricing in that Ethereum would also be coming back down to those $300, $320 levels, right? So Uniswap pairs, set an alarm, 29,000. If we're above this resistance level right here, I'd say it's pretty safe that these 10, 20x plays are going to continue coming as they have this past quarter. I do not think this is the end of the DeFi mini bubble or growth that we're seeing. It's still so early right now. So just keep that in mind. Let's take a quick look at someone's. Actually, before that, Sushi. This is what a chart. We were very cautious with getting people along on this one. Glad, hopefully nobody did. It did not break any resistance levels. This thing kind of reminds me of the Chain Games chart, which is another Uniswap pair. So no reason to be bullish on Sushi here until we've actually cleared some of this. This is a 4-hour resistance level. But we've been consolidating in this range for actually not too long, only about 2 weeks now. But this is coming into that key support level that we talked about last week on our stream. If this goes, well, we're going to have a very similar case to MTA with that negative price discovery. These aren't knives you want to be catching. Wait for the confirmed reversal. That's all just wait. Like, I know you guys all want these sniper god tier entries, but would you rather buy into a trending market where the probability is 85, 90% that it's going to go your way? Or do you want to roll the dice, that this is going to hold, and then it drops out another 50%, wiping out your portfolio. Comment on gold in the break of the tightening range. Yes, let's get to that. Quick little review of seeing what we're seeing in the S&P off this. Okay, US dollar reversed back down a little bit, still stuck in the range. So again, this is pretty typical from typical market reaction. No new information given from the Fed. Basically going to hold all the current policy and interest rates. So yeah, market will probably just continue as it was going. But gold, this is one we've been following for a long time. It's another one of those macro indicators that very important to keep an eye on. And it's one of the most bullish charts out there, right? Like it's tough to be a bear just yet because it's still consolidating in and above the former all-time highs, right? We talk about these throwbacks constantly, and sure enough, they appear across all the markets, weeklies, dailies, 4-hour time frames. We got that first initial blow up, and then it's come back down. If this turns to support, which it's doing, this thing is going to go, right? It's forming a consolidation base above these highs. It's building liquidity. That's the inevitable direction. If the only thing that I see stopping this would be a dramatic high velocity surge, which would see the VIX explode up for volatility, both in the S&P and across the fiat pairs. And then we would likely see the come down in gold. But where's it really going to go? Like fundamentally, this thing is ultra bullish. Many of the world economies are on fucking life support. Double digits employment globally in a lot of places right now. The only growth that we're seeing right now is from the Fed, from BOJ, central banks trying to pump liquidity into the markets, right? That's it. There's no other impetus for this for growth right now. And when you have contracting credit, contracting lending, and credit-based economies, it creates a deflationary downwards pressure. So if anything, we're probably going to end up with a stagflation, where the Fed continues to pump QE, but they don't get the desired inflation that they were looking for, right? So if we do see the US dollar break out because there's a dollar shortage liquidity over the next couple quarters, where's it really going to go? Back down to 1800? Probably, right? And it's likely going to support here. This is a multi-year resistance level that we broke out from. It has yet to be retested. That's why, if we did break out, this is such a great target, right here. 1750, 1850 level. But right now, the bias kind of has to be towards the bullish case. There's no reason to be bearish on here unless we lose his former all-time highs. So hopefully that's enough insight for you on that one. And same case for across the board for precious metals with silver. It's a very similar relationship actually with Bitcoin and Ethereum, right? We always say they move normally in tandem with one another, but the smaller asset class, silver in this case, tends to be much more volatile than gold. So I use gold to help determine the trend of the entire sector. And then I'm going to be looking for assets that correlate well with that sector, but offer higher upside because of the expanded volatility. So, very similar to what we see in crypto, you can apply these concepts across all markets. And that's our goal here, is to teach you concepts and strategies that you can take to build a toolkit and use this to develop your own trading strategies and signals and stuff, right? We don't want to be the signal services. We want to be the guys who are teaching, basically giving you the pick, not and telling you where to go look. Okay, so that's gold. Let's quickly move over to BNB. I actually already had a chart ready for that one since it was approaching a really big key level. The Binance Smart Contract chain is live. I think we're going to see that pretty significant growth there. I know there's a lot of stigma around CZ and Binance and this whole centralized DeFi. It's kind of an oxymoron, but at the end of the day, if you guys read up on what CZ was saying, and I agree with it, DeFi has been eating into centralized exchanges' market share and market dominance. This is what we were talking about before with the gatekeepers in the legacy space, which we'll get into shortly here. It's very similar. Like the centralized exchanges have acted as gatekeepers in crypto for such a long time. So now when you actually have a real, actual liquidity, actual trade volume taking place in a decentralized space outside of their centralized ecosystem / bubble, it's concerning, especially when they're not dumb. They can see, they see the market opportunity here and the growth that's going on. They want to capture that, right? So CZ and the Binance team have proven that they're very good at iterating retail products and market demand, relatively quickly. So I think we are going to see, and they're great at incentivizing developers to come over to their chains, right? So I think we're going to see a lot of growth on the Binance Smart Chain over these next couple quarters, and that should translate pretty well into BNB. So that's kind of my philosophy, or my thesis around that. From a market point of view, well, this thing's at a really great level for taking some long exposure. We've come. Actually, I'll be a little bit more courteous here with my levels. So normally I just take it off like these former highs here, but you gotta give it some elasticity here. So this is the actual range highs, and sure enough, we've come back down there. We've retested it. We got the green dildo forming right now. I think this is one of the few markets that actually look really good for upside this quarter. Yeah, like this looks fantastic. I love seeing this. So what's the play right now? Well, if you're not already long, you're basically risking these lows right here. So let's get a quick price range on this. So your risk is let's be that. Well, actually, it's about 12%, but that's not bad considering if you're thinking a swing trade. You got to be thinking big here, like the CZ and the Binance team are, right? Obviously, this price history doesn't go back farther enough. Sorry, but again, 55% trade. These are the levels I would be looking to get tested as long as this holds as support. So it's still a 4-to-1 trade, just on spot there. Obviously, you can lever up if you get the ideal entries. Quickly zooming this down to the hourly. You see, and that's what I'm saying. I'm bullish long term, but I don't want to be entering into a margin position if the intraday doesn't line up, right? So like, if I want to be getting long right here, I don't know. I don't think so. Why? Because the market has yet to reclaim this bearish throwback level, right? So if we do see this level get reclaimed, that would be your signal to be getting long on this, and I would feel really comfy in a margin position on that. But I need to see the market come back up and reclaim this as support, and then I'd feel confident. So I'm looking for this, right? I'm looking for this to flip back from support or some resistance back to support. That would be confirmation that we're about to see continued upside. So that's my advice on that one. What else do you guys have here? SXP, that's a hot one. We talk about that one a lot. Let's see what it's up to. I suspect it looks very similar to every other chart. Yep. Oh God, literally at range lows right now. It's already, oh Jesus. This is truly an Eiffel Tower. Let me quickly draw a correlation to the Wall Street chart. Pull this up here. Drag this over. Okay. Here we go. Euphoria, I think we can clearly, it's safe to say that we've gone through this. The complacency and the eventual sell-off. Let's compare that. Let's see what this looks like right now then on SX. So where's SXP? Where did that chart go? Sorry guys, so many. Oh, here we go. Wow. This sure looks like Euphoria, the retest, the complacency. And this is probably a lot of anxiety and denial as it slowed right back down to almost fucking fresh lows here. Would you want to be getting short right here? God, no. No, do not short right here at daily support. This is where the probability says we're going to be seeing a bounce. Where is that bounce going to happen? Can't say exactly. Like this whole daily range, it's wide. Right? And that's what I'm saying with these newer, less liquid projects. They're going to be much more volatile, and nailing this stuff on leverage can be tricky, right? Even you're on 10x, you got a 20% spread here, easy liquidation just within this actual buying zone, right? So that's why I don't like cranking up the leverage on these coins until I actually see confirmation that it's actually moving out of range. So what's that, John? Okay. So yeah, producer's just saying KuCoin does have some more history, but we'll just, this is a daily. I'm just going to use this to illustrate the point. We could bounce in here. I think we will. I think we will see a bounce. This is very tempting to sweep these lows. If I'm a market maker and I just see that we're breaking down from the, this is almost a week half consolidation range. How do I not sweep these lows? Like everybody's stop loss from this consolidation block, right here, is right below here. You could wipe out this entire market with one wick, right? So that's something you always have to keep in mind on these low liquidity things. That's what I'm going to be looking for. I'd be trying to buy a sweep of these lows if the markets from the majors weren't shitting the bed. So if you're not buying that sweep of the lows, what do you got to do? You got to wait. You have to wait, right? I want to buy this expansionary move that encompasses this, right? This is a 60% move to the next level. It's a vacuum, right? That's what I'm looking for. I want to see price bounce off this $1 mark or slightly just under it, reclaim this $1.80, and then I'd be happy getting into this. Yes, I'm missing this initial move, but I don't care because now I'm not taking the further downside risk, and I know the probabilities are on my side that this is going to be going up, right? When you walk into a casino, the house usually has an edge. So why not give yourself an edge in your trading? You don't need to play with the house. You can just wait for the confirmation on these expansion trades. That's the whole point that we're trying to create here. Tony had a question. Hey, Nick, what proportion of your current trading is on DEXs versus centralized platforms? Is there anything that you do manage risk on DEXs? Absence of stop losses. Yeah, so a lot of the time, the only things I'm using on DEXs are Uniswap pairs from pre-sales that I've invested in. So generally, a lot of this stuff has like a really early vesting over 3 months. So if we're in an environment where things are going to be launching at a 3 to 5x, I'm happy to take that initial principal off the table and then just let things free ride. So I don't really allocate much of my trading portfolio to any decentralized exchanges like Uniswap, Tuniswap, Uniswap, etc. Those are mainly just projects that I want to hold long term, just using MetaMask or something like that, right? The majority of my trading is done on centralized exchanges just because the liquidity is there. So, and exactly, like I don't want to be having to market buy into every position, especially when, as I was just saying, your slippage could be huge on some of these Uniswap pairs, like 5-10%, right? That's the whole reason people go to do OTC in the space. OTC in the first place is to remove that. But a lot of these markets on Uniswap pairs, other DEXs, they don't have that same two-way liquidity in the OTC markets, which forces you to use those. But I know, I'm sure in the future we will see DEX technology continue to iterate, improve, and I'm sure we'll see other order types, such as limit orders and stuff in the future. But I would say, like I said, I don't keep anything on DEXs for trading. I'm just not there with it yet. I need more liquidity, more order types, and if you're doing automated trading, it's there's not even any APIs or anything. So yeah, it's difficult to put too much over there. YFIIG is the next hidden gem. I mean, maybe not. I can't say anything. I don't know anything about it. But what we can look into is AR. I believe that's Arweave off my head. Yeah, it is. Okay, they are on some exchanges. So I'm actually very familiar with this project. I won't get too much into it, but there's heavy OTC two-way volume on this for pretty much all summer last year. So a lot of the supply is in the hands of a few large funds, which tend to have much longer time horizons, and that's a good thing. Like that's why looking into the OTC and the former round details, how much was sold, who was it sold to, having this information is super valuable as a trader, because then I know that the majority of the supply is going to be not locked up, but in strong enough hands, and I know what their exit strategies are, I can take informed trades off of that information. So what a run this market has had here, and hardly anybody talking about this. I haven't seen anybody on Twitter talk about this one. It's at a pretty interesting level here too. This is the daily throwback, basically right here. I guess we just tapped into it recently, and probably on like the last 2 hours should be my guess. Yeah, last few hours tapping into this daily range. If it holds here, I think that's pretty strong. If it does fail, and again, it's all going to be really dependent on what the majors do here. I would expect this thing to come back down to at least here. So you're looking at a price range. So I always take the price range from the low, not where price currently is, right? So what I'd be looking for, it's a pretty significant downside, another 21%. And to be fair, has this, well, I guess you could say this was kind of filled here, but this is where the real demand is going to be, back down there at that $2 level, right? Again, there's quite a bit of demand OTC for this stuff, so that's a strong underlying bid on this. Just what a run. Where's this going to go in terms of resistance? Like, what does it need to break to get bullish again? Well, obviously right here, right? Like, look at that. 1, 2, 3, 4, 5, 6 wicks on a daily into a level. That's enough for me to say $4.10 is a pretty key level to break. If we can close back above there, so what would that look like? Well, let's draw it out. Trusty tool here. It would look something like this. If we see this flip back to support, I'm confident in saying this is headed back to $5, the $6 level here. Again, there's not a lot of history. I think this ran up in 4 days, quickly came back down, right? So, take this with a grain of salt. But these are the levels that the charts are giving us: $5, $5.50, $6.50, and then kind of air oblivion up here above $7. So yeah, this is the most bullish thing that could happen, bouncing back up, flipping that support. If it does fail, probably going to do something like this. And this would now be the bearish throwback level to retake, right? So if it broke down, where would I get long? Well, you could try and long the daily level. If it holds, great. Where would you be looking to offload? Back here at the throwback, or if it did break through, then this would be bottom confirmation. So that's kind of how I look at that right now. I'm neutral on it. How can it's below my level. So until it does move above that, I'm not going to be touching this one. Quick look at DOTS then. Another network that everybody should be paying attention to. We were on this very early. I think it's going to do wonders. Doesn't look the best right now. Like, you kind of see the makings of a pretty nasty flag. Again, there's not a lot of history on this market just yet. Yeah, it looks fucking atrocious. I'm not even going to look at that. But what does this need to do in terms of horizontal? Well, look, it's very, very clear here. Draw off there. The real demand is down at these levels. Weep. And you also have another daily level back down here around like 390. It's much smaller. Again, like a lot of this stuff only has 1 or 2 hits on it. The less interaction with the level, the less confirmation, then the less weight you can give it here. But the reason why I really like this level here, I'll zoom in a little bit, give you a better picture. 390 to 3.7. This was the impetus. This was the spring, the origin of the spring for this move here, right? We've come back down, confirmed that, and sure enough, where did it get rejected? Well, it got rejected right at the bearish throwback level. So this is now giving you, if you're on the long side of this, the level that we need to see break. If we see this 5.7 get break, what's that going to do? It's going to confirm the momentum. It's going to confirm that the probability, 85% plus, is on the long side, right? So that's why we like using these confirmation levels more so than just blind longing in the middle of nowhere, which is exactly where price is right now. So what are we going to need to see here? Well, if we do dip back down here, this little higher low would be your first signal that this is now a confirmed bottom, right? If you're not able to snipe either a position off this retest, or this initial retest into this daily level, you need to wait for this resistance level here at like 5.2 to break, right? And then you'd have a signal this is headed back to 6.5. That there is good enough for a 30% trade. You probably see a little consolidation. If you miss that trade, where you're going to get in on this next one, right here, confirming that this resistance is now turned to support, right? And then you would see an actual expansionary move. So that's, again, just wait for the confirmation on these moves. You're going to be catching much more upside, or if you invert these, downside. The point is you're catching the majority of the move with less of the risk. Sounds pretty fantastic to me. Let's see what else you guys got in here. THETA. All right, we'll take a quick look at THETA. And then I quickly do want to mention some points from the newsletter that we put out there earlier in the week, particularly around gatekeepers, since I think there's going to be a lot of market opportunity around that, as there is a huge unserved portion of the market doesn't have access to DeFi, lending and borrowing services, right? They're essentially controlled by the DeFi gatekeepers, the maker DAOs, the serums. So dots, we're done with that one. Pull up THETA quickly. Sure, will you Huobi. The gatekeeper of China, it's essentially Huobi. They definitely have a golden contract with the CCP because they just keep getting away with shit. You track a lot of these like stolen funds or suspicious funds, and where do they always go? They usually go to Huobi. That's where the trail ends. So yes, why would an attacker send funds to a KYC'd exchange? Kind of gets you wondering. But THETA, wow, what an amazing chart here. What do we need to see right now? No major divergences or anything. Put a level off of here. There's not much. See, that's the other thing. When you move up so fast like this, and that's why I like seeing these retests. It builds market structure here, right? So you got that giant U. What could we see? You could see a cup and handle here. I don't know too much about the fundamentals of this project. Where's the ideal, the OTE entry, optimal trade entry? It's right here. Between 2.5 and 3. Do I think it's headed there right now? No. Like this looks pretty strong, right? Is it flip that? No, it hasn't quite flipped that. Has it flipped this? Okay, so it's trying to flip this 4.5 level to support. Former wick resistance. I'd say if this 0.45 level holds, that's going to be that'd be pretty good for me. That we'd see continued upside there. If this 4 level 5 fails, well, it's probably going to go back, return to the origin of this recent spring. Where is that? Well, pull it over 0.35-ish level here, 0.35 or so. If this level were to fail, well, then I have a high degree of confidence that we'd be retesting here. So again, you got 3 levels to watch out for, 0.45. If that holds, we form that base layer. I think it's going to be good for the next swing up. If it fails, it's then going to go back to retest. This is a 3-day chart, by the way. It's going to retest that daily level back there around 0.4, 0.37. If that fails, then your OTE entry, where you would definitely want to be taking a stab at this thing, would be this 0.3 to 0.25 mark, which it was also, why do I like this level so much as well? Look at this, right? It breaks above this resistance here, right off that mark right there. Boom, and there she goes. So this is already confirmed a support resistance flip for me. I'd feel pretty confident taking a long off this level if it did get back there. Otherwise, just watch those 2 levels. Looks good. I don't know what it does other than that. I think we're down to these last 2 charts. If anybody has any other things they'd want to see, drop it in the box. Otherwise, we will finish up with VIDT and NWC. Both projects that I have very little clue on the fundamental side of things, so we will see. Is this a Uniswap pair? No, it's right here. Oh, it's only a KuCoin. Oh, wow. Okay. So this is a chart, it's moved away from its throwback levels quite aggressively. So we will, you have to draw them, right? Do they get hit tomorrow? Probably not. Draw a trend line off this one. Why am I drawing a trend line? Just because I'm seeing an ascending structure here. So I wanted to see what that looks like. In terms of levels, though, that's what we're all here for. Probably here. Why these levels? Well, we have so many wicks here, right? And they're higher lows off that. So it's confirming the support block, 0.14 to 0.17. I know it's a wide range, but that's what you're going to get with these, again, smaller cap tokens and stuff. So yeah, it's made higher highs. It did so. No bearish divergences or anything. The market looks pretty healthy momentum-wise. Again, I think a lot of this stuff is, all these markets are going to be responding to what Ethereum and Bitcoin do next. If they do get rejected, then yeah, this market is headed back down to retest these daily levels here, right? And that could be a significant drop, 21, 30%. If it fails, well, your next level probably back down there at 114, and then back down to 08. There's not a lot of price. This thing just moves so fast, right? There's not a lot of price history to go off of here. So the only thing you could really do, and this is grasping at straws with this much data, literally going off of 3 bars, would be this level here. You could probably see a bounce there. Otherwise, you'd have to wait for a retest back down. Those are my views there. Finally, VidT, another VID token. What do these guys do? Oh, wow. So yeah, you're seeing like a lot of these small cap tokens coming down quite aggressively off these highs. And that's the thing, like, if people are anticipating a drop in the majors, you're going to kind of get that game theory situation of, who's going to move first? Who's going to take the first shot? Nobody wants to be most of the time, nobody wants to be the first guy to break a range support. Somebody has to do it. It happened today. And sure enough, it's already retested it. You can see here on that wick. So that, 55.77 mark is pretty key, I'd say. It's definitely bearish below this level. It's coming into this daily block. I wouldn't want to be getting short necessarily right here. This is an untested support resistance flip. We did have a strong momentum push off of it. I would be expecting a bounce, but where could it bounce to? Well, first let's draw out this one, because this is going to be the actual OTE entry, right? Like, that's your proven daily support. So what would I be looking for in this situation? Well, you got the Stokes spotting, momentuming is coming down. No major divergences or anything in momentum. You're going to be looking for some support. This is the first option. Support there, break here. That's your signal. There she goes. If it does continue, it comes back up here, fails, I'd be looking to get long down here. So kind of around that like 2,000, 2,500 Satoshi mark. Really good proven support right there. It's, had its high, its breakout, retested it, Wyckoff throwback complete, and there she went. So very confident that we would see support in this range right here. I wouldn't expect that it goes much lower unless, again, like the majors literally blow out, we're headed to zero type situation. But even now, quick look on Ethereum, Bitcoin, it's no reaction here off the Powell statements. US dollar not doing much, S&P not doing much, gold just chilling, right? Same thing with Bitcoin, like, don't get long on this thing unless we're back above here. Otherwise, it's already tapping that resistance. So, in order, Bitcoin needs to hold this 10.9 level right now. I'd get pretty concerned from an intraday perspective if we did see 10.9 go. Otherwise, it's probably going to come back, retest this level. And if it holds, then I think we're going to be good for that final push up to that 11.4. If it fails here, well, I'd be looking for a deeper retrace. At minimum, back to 10.5, 10.6. I think KSM maybe. Okay, we'll do one more. KSM, one of my favorite charts, the Polkadot brother. This is a place where people go to launch new ideas, test their product, build up their network, and then when they're ready, they can port over to Polkadot's using a bridge like Moonbeam or something like that. So quickly pull it up here, KSM. And this is a rocket. And personal story on this one. speed in the OTC space. I had 100,000 tokens of these things from like 55, 60 cents. This thing's rallied, it's at $41 now. Unfortunately, I was a noob and sold just almost on a double around like $1, $1.10. And sure enough, about a month later, she breaks out hard. I'm extremely, this is a Polkadot's play. I'm extremely bullish on this whole ecosystem. So, I'm going to have a bullish tilt here as well. And it looks great. This is the daily support level that needs to continue to hold between that $26, $29 level. If you're long on it for much lower, I don't see a reason to close, really. Like, the ecosystem's growing. There's so many interesting projects being built on its layer 2 right now. Interoperability is surely the future. Polkadots is going to be a major bridge for completing that vision, helping other projects that may be getting bottlenecked on Ethereum migrate over to greener pastures. Where is this going to go in terms of resistance? Again, there's not a lot of data. We were only up here for a few days. It was heavily rejected. So anywhere up here, really, this is where you would be expecting it to go. So what are you looking at in terms of price range? Well, if it breaks this level, it's good for another 10%, 12%. So I don't think this can be margin traded anywhere. I could be corrected on that, but yeah, this is something that I would want to be holding long term. I'm extremely bullish on this asset. I think this is going to be one that hits $1 billion market cap, no problem, as we transition into the next big bull rally that I think we will see next year. I think all the pumps that we're seeing right now are test pumps. I don't think this is the real deal just yet. Have you woken up to multiple days where we're up 10, 20% on the majors? No, you haven't. So we're not actually in the true bull run just yet. When we start seeing multiple $1,000 days on Bitcoin, $50, $100 days on ETH, that's when we're in the actual bull market. Dollar cost averaging since 2018. Which asset have you been DCAing in on that one? Yeah. Okay, well, that's just over 12 o'clock now. I think we're going to end our stream here today. Again, yeah, I had some final thoughts here quickly. So yeah, as you can see, my views on the market, short-term bearish until we break above these key bearish throwback levels. When I first started trading, I traded with no plans. I'd be logging resistance, hoping it just went up. And then I just got sick and tired of losing money, right? So now I wait for confirmation. That's what I try to teach to people here. It's okay to miss trades, right? So wait for Bitcoin to close at the very minimum, even right here, right? Close above 11.4, 11.5. It's okay. It's okay to miss a $500 move if you think this thing, it has $1,000 expansion beyond that. That was significantly lower risk, right? So just wait for some confirmation. Same thing on ETH here. No reason to be bullish on it until we're back above that $395, $400 level. And once it is, pile back into your altcoins, enter back into your Uniswap coins. But for now, I think there's some more short-term downside risk than upside gain. So I'm happy to take some profits off the table and just wait and see. And if I'm wrong, then what have I really missed? A 5% move and I can jump right back in? I'm happy with that. So that's the stream, guys. I hope you enjoyed it. You had some takeaways. Colin and I will be back on Friday, same time, 2 p.m. Eastern, 11 a.m. Pacific. If you have any comments, feel free to reach out to us on our Twitter. Make sure you smash that like and subscribe button, and we will see you on Friday. Thank you for tuning in.